Welcome to Income Insider TV, where we bring on experts, founders, and thought leaders to break down the trends that are shaping your money and your financial future. I'm your host, Sam Laliberte, and today we are joined by Patrick Traverse, who is the founder of Breakaway Financial Group. Now, Patrick works with entrepreneurs, small business owners, and he helps them bring more structure to cash flow, to taxes, investments, and long-term financial planning. He's a formal professional athlete. Okay. So Patrick brings a systems driven approach to wealth building. His philosophy is that success, whether it's in business or personal finance, it comes from doing the right things consistently over time. Patrick is a certified financial planner. He's an enrolled agent, a certified expert. He's a certified exit planning advisor, and he helps business owners build wealth more intentionally and tax efficiently. So, in this episode, we are going to talk about why making good money does not always mean creating financial clarity. We're going to talk about the financial mistakes entrepreneurs often make and what everyday Americans can learn from the way successful business owners are building long-term wealth. Now, as always, before we get started, quick disclaimer, nothing in this conversation is financial, tax, or legal advice. Everybody's situation is going to be different. So if you are considering making changes to your finances, to your taxes, to your retirement savings, investment strategies, please speak with a qualified professional. With that said, Patrick, welcome to the show.
Thank you, Sam. It's great to be here.
Yeah, I am so looking forward to hearing your journey because it is not a typical one. You went from professional hockey into finance, into becoming an entrepreneur who started Breakaway Financial Group. So walk us through that journey a little bit. Do you remember when you were younger, noticing that maybe you thought about money or finances differently from your teammates while you were playing hockey?
Actually, it started a lot, like earlier. So then that if you talk to, like some of the students I went to high school with, so they would have told you that they would have seen me more as an accountant than as a hockey player.
Okay.
So for me, it's more of a place that I feel, like comfortable in. I've always been a numbers person. So it's so for me, like it's natural. But I think my experiences, like as an athlete, as a person that did well so early in my life, I was introduced to working with advisors and how that world works. And for me, it was an eye opener. There was a lot of things so that I struggled with. So as an investor and seeing that from from my own eyes and looking at what I needed so at a time and what I couldn't find, I think was what made me want to do it and trying to be a person that would be able to help entrepreneurs or investors get the need so that they need it at the time.
Okay, so it sounds like finance and entrepreneurship was actually more on brand and less of a surprise to people than
I think
hockey. It
so,
kind of
yes.
felt like, we saw this coming for a long time. I'm sure, though, that experience playing professional sports has impacted how you run your firm today. How could it not? Is there a specific habit that you really picked up from the sports world that applies to the world you're in today?
Well, when you're part of a sport as an athlete, I think one of the things that you have to always do is work on your ability. So you always like try to get better because there's always somebody behind you so that's trying to get to your spot. So for me, I'm looking at business exactly the same way. Is I always try to look at a new day for a time to get like more education about what I should be doing and improve some of my business and how I help some of my clients.
I love that. You are now an entrepreneur. You have a business called Breakaway, and you actually describe Breakaway as a personal CFO team for entrepreneurs. So, for somebody who's never heard that phrase before, what does that actually mean in practice? And how is that different from if I wanted to hire more of a traditional financial advisor?
So I would say a financial advisor is probably uh, a smaller realm of look at how the finances can be improved. So I think whenever somebody is an entrepreneur or a small business owner, they have to look at the whole picture, including their business. So there needs to be a look at their accounting, their how to grow a business that would be sellable or that would increase in value. How do we use that business to now use the tax code to improve it, like tax efficiency, and how to bring more of that money home, to then look at the topics that a financial advisor could use to increase wealth. So I think the way that I look at my business and how I help our clients is a lot more broad in like in nature. So wanted to name it something that's a little bit so different, so that people that are interested in our services are going to see that, so that what we are doing is a lot so broader in nature.
Okay, so it's intentionally broad, but to get, I guess, specific for a moment, to just help people understand where and when they might use one or the other, can you give us an example of maybe a decision that personal CFO would weigh in on that a typical advisor wouldn't touch, or that wouldn't be part of their work?
So a lot of times, if you talk to a financial advisor about possibly a tax decision or a tax approach or strategy, so that they may want to that someone may want to use, they normally say that they should talk to their tax accountant. So being able to have all of the credentials and the knowledge to be able to approach the whole scenario, the whole like picture, then we are like able to look at all aspects of their finances and to bring some guidance on all aspects, instead of just investments or just like planning in general.
Okay, that's clear. And I know for entrepreneurs, sometimes we focus just on making money and thinking that once we have the money coming in, it's going to solve everything else and everything's going to become easy. But you actually specifically call it a problem on your website that you see a lot, which is successful business entrepreneurs and business owners. They have revenue, they're coming in, but that cash flow, it still feels unpredictable. Their tax strategy, it feels super reactive. Their investments are scattered. And so they often wonder where the money is even going. So do you think this is more of a mindset issue? Is this a systems issue? Is it both? Like, what are you observing when you actually start working with these clients who don't feel that clear?
Well, I think one of the first things that we do is that we want to bring in the data. So we take over their QuickBooks or their accounting software, and we want to look at where the money is going in their business, so that we can see if there is any efficient ways to reduce spending, so that there's more at the end of the day to make true investments, either like in the business or outside of their or outside of their business. So the data is very important, and once we have that data, then we want to we want to create a business plan or a financial plan for their business. So having that in mind, then we can see what are the things that we can plan for over the next year or two, that the business owner may want to spend on to increase the value of their business, but also to build wealth for themselves. So I would say the most important part is the data, is to go back and find a way to get that data to be to be used on a monthly basis, and as soon as possible, once a month is done. So have that in place, and then creating a plan, like after that, is also important to, as we know more about the business and what they and what the business owner is trying to accomplish.
Okay, so you're really understanding their numbers. You mentioned QuickBooks, you're looking at their accounting software, you're really following the money. But then for a lot of business owners, where all that money is being tracked and followed could be in so many different places, scattered across their financial life. They have business accounts, they have personal accounts, there's tax planning, there's retirement saving, investments, insurance, who knows? But it's all over the place. So you really help people go from scattered to systematized. I think that's one of the languages you use. How long does that typically take before a client has, real value in improving these things, and what starts to change when these things are all working together as a system?
Yeah, if somebody has a some experience as an employee and they've had a job where they had a 401k, so one of the things so that we talk about to those people is that we often see that there is value in automating our finances. So having a 401k that we know that we're putting in a certain amount, like on a monthly basis to our accounts, and we kind of set it aside, then we find out that that money is going to grow over time. So we try to help our clients to accomplish all of that with all of their finances. So either through the business or through like personal accounts, then we want to try to automate as much as possible both of their business and their personal finance. So for us, it depends on the complexity of of the client. Like we will spend so that times so that we need to understand so the client's situation in the business, like and personally, and hopefully normally, so within like 2 to 3 months, then we can so set up some automation so that the money ends up in the right places. That's going to be more tax efficient, and that's going to grow some of their wealth at the same time.
Yeah, I imagine it depends also on how organized they are ahead of time to determine how quickly you can really help them. So, are there like tools that are almost prerequisites that you would say someone should already have in place before even working with you? Like you've mentioned QuickTimes. What are some habits or tools people should already be using and having set up before you come in and start to help?
We actually have had clients of all sorts. We have some clients that are pretty organized, so they have so QuickBooks in place, and they have some accounting in place that we are able to try to optimize. And some of them basically just have a bunch of receipts, like in the box. So it comes in all shapes or forms for us. But the idea is the same: is we want to put the effort to systematize so these clients, so that we can grab the data and use that for their benefit. So the idea, I think, I would say on this is that it's never too early. If someone is interested in learning more about how we can help, and how a company like ours that helps our clients with streamlining so their finances, is not to wait. So normally, so earlier is better.
Okay. So really as soon as possible. And what do you think is the cost of never doing it? Right? A lot of people are surviving year after year. They're reacting to their taxes. They're making it work, right? They're surviving the keeping the lights on. But what is maybe the cost that they don't realize of waiting too long to put a system like this in place?
Well, I think like everybody heard about the compounding, like interest effect. This only works if you have time. So the longer so that you wait in creating a financial plan of some sort, and having your finances work for you, the more it's going to cost, like over a long term in your ability to build wealth. So for me, it is always so better to have someone that has so decided to make the step forward to go ahead and make some changes in their financial life as a good new client. So as long as we have that, then so we know so that we can work so with them to better them in in their finances.
You're also an enrolled agent. So taxes are also a big part of the work you're doing, in addition to just cash flow and planning and what their goals are. It's kind of their obligations that we have to do on an annual basis. Now, I know there's a distinction between tax preparation and proactive tax planning. So help us distinguish those two, and why is it important that we see those things as separate?
Yeah, so preparation is part of the compliance part. So
Okay.
the IRS, and other like institutions, so every state and every county, so need us to file and pay taxes based on income, so that we may produce. So all of that is very important, and we don't want to miss that. So that's a big part of making sure that we do the right thing for our clients. But tax strategy is more about learning the tax code and what can be done based on someone's goals and plan to keep more of their money in their pocket and investing in things that the government is incentivizing us to invest in. So there could be some places that are a good fit. So for a client, that instead of paying a larger portion of taxes, we give that to investments instead and pay less. So to the IRS in a way that's incentivized and legal. So for that to be so happening, it's not something that is done at the last minute. So whenever it's time for tax time, it's normally too late for a lot of these things. So it's something that is like occurring throughout the year. So for a lot of our clients that we filed in April and March, we normally start right away in creating in understanding what their expected income is going to be at the end of the year, and then starting to review some tax strategies at that time to help use that new income as ways to build wealth and reduce our taxable income.
We're talking about tax credits, right? I feel like that's the language I've heard before, where if you are investing in your business in certain ways, the government will give you a credit if it's aligned with maybe strategies the government has. Is that correct?
So a credit is different than a deduction. So most
Okay.
tax strategies are going to provide a deduction of income. So depending on the tax bracket, it's going to provide a tax savings based on that tax bracket. But a lot of these things are going to be what could be purchased or done inside of the business that would help grow the business. So that's the first place to look at. And then there could be the same thing, like maybe there's oil and gas, like investments that could be purchased to diversify a portfolio that provides a large amount of deductions for an investor. So there's a number of those, and the idea is to provide a client with what would fit them best, so that they can build their wealth with the type of assets that they want and believe in, while having a look at tax efficiency at the same time.
Okay, that makes sense. And without getting too specific, I know everyone's taxes are going to be different, and that's really the value of working with somebody who can look at your books and really provide some strategies. And as you said, do it ahead of time, because when it's tax time, it's too late to allocate those funds in a way that's going to benefit you for this tax year. And now you're starting to look at the year ahead. So really, it's as soon as possible. You want people to be thinking about this. So without getting too specific, what are just some general mistakes when it comes to taxes that you see entrepreneurs make once they start earning real money?
I would say, to go back to my planning idea, I think it would be to have some discussions early on. So not knowing what the strategies are going to be or not, like having a plan is probably the biggest some mistakes that we see. And to have some conversation or have someone that you can talk to about these things. So one of the issues that we see, and one of the reasons why we're growing, is that most accountants or CPAs do not have the bandwidth to talk or to meet their clients and talk about tax planning a few times a year. So because of this, then it's hard for someone to know what they need to do so during the year to take advantage of these of these strategies. So I would say the biggest mistake is not having a plan and not taking the time to learn more about what is right for that client. Again, there's a number of things so that can be done, but understanding the family or the business owner in their life, I think is a big part of what needs to be known to be able to create a tax plan.
So in general, it's really just not having a plan is the most universal mistake that you're seeing. Are there like specific mistakes in terms of how entrepreneurs might be running their cash flow or their businesses that are those mistakes that become really hard to undo once they're already made? Any like really big red flags we can give people as a concrete example?
So I would say not understanding the amount of income that may be expected. So by the end of the year, so understanding like what the profit is going to be. So a lot of times somebody gets in the fourth quarter and they're finding out that their profits is going to be high, and they're scrambling, like at the end of the year to purchase some equipment or do some sort of an expenditure for their business, to reduce their taxable income. So I would say that's probably outside of the planning aspect. The last minute strategy, which normally is not a good investment. So we want to be able to put our money in places where the money will enable growth, either in the business, or in our wealth. So for that, it takes some time to find what would be a good investment. So being last minute and not having a plan is definitely a big thing, so that we're trying to avoid.
Okay. Another one is just entrepreneurs not being clear on how much they should be paying themselves when they're business owners, right? They struggle with what that number should be. How much should I leave and reinvest in the business? How much should I invest outside of the business? So how do you think a business owner should be thinking through that decision?
So we see a good amount of business owners that have a fairly good idea of their business. Like in general, they know, they have a good sense of what their books are. They have a fairly good idea of what their profits are going to be. However, they don't tend to have the same emphasis in knowing what they need. So personally, they basically use their business as an ATM. They just pull some money out so as needed, instead of really finding out and doing some accounting or personal accounting to find that out. So one of the things that we do is that we use a tool like Monarch to do the bookkeeping for us, so that we have an idea of what that family needs to live on and be so comfortable. So once we know this, then we can automate as much income so that is needed to satisfy their lifestyle. So then whatever is left can be used for future investment, for tax strategies, and all of that. So understanding both sides of the equation enables us to understand that, automate as much of that income as possible and see what's left over for growing wealth and tax efficiency.
Okay. Are there any signs that somebody is paying themselves too little? Like, is there anything that you notice that would flag that you should be taking out more money from the business?
So, I mean, it's never, I wouldn't say, one of the things that we want to ensure is that because our clients are working hard, they're, as an entrepreneur, their business is their love, is what they do for like most of their lives. So we want to make sure that they have a way for them to enjoy life, at the same time. So it happens, sometimes that people kind of need a nudge or some sort of a permission so to take a little bit more and go on vacation so that they can come back and be refreshed and grow their business some more. So understanding again what the business can do in terms of income and what we understand about their lifestyle and what their basic expenses are, personally, then we can allow them to take more home and ensure that there's a portion of that that's being invested as well. So again, all the data so that we capture enables us to really find what are the amounts that need to go in the growth of the business, in the growth of their investments, and for them to enjoy life in general, and get them to the place that they'll be able to retire at some time, at some point, with enough assets to live on and be comfortable, for the rest of their life.
Yeah, I appreciate you mentioning so that someone can actually go enjoy their lives, right? This is a big piece of why people become entrepreneurs, and that freedom to be their own boss and to dictate their lifestyle on a regular basis. So are there ways that you help people feel more comfortable with the idea of taking money off the table when realistically it's easy to get into that mindset of, well, the business could always use more?
So we have a system that I call the bank account structure on the personal side of the finances, where we show them what is important, in their life, and how to give a purpose on every dollar that they bring home. So a big portion of that is going to what we call the lifestyle savings expenses. So those are the things that for most people these days want to do. So they want to have experiences and want to take their kids for for some vacation and try to live together in and have some experiences that they will remember for a long time. So that process, again, because we like automation, as soon as the money comes in, on the personal side, there's a certain amount of money that goes into that bucket of expenses, so that they can plan ahead for those memorable experiences. So it is something that we somewhat force our clients. I think so once we do that once or twice, so they really like it and they want to do more of it. So the idea is to really push our clients to use their business to build that wealth so that they can do more of that.
Mm-hmm. Yeah, there's taking money out to enjoy your life, and then there's also taking money out of your business to build wealth in other areas. And that can also be tricky for entrepreneurs who really just want to pour everything back into growing their business. It makes sense. It's what they know. They can control it. It's often what's given them the best return so far. But at some point, just investing solely in your own business can be a risk. So why do you think it's important for business owners to build wealth outside of their business, and where should they start?
Yeah, so part of the to be a certified exit planner through the Exit Planning Institute is that you learn the facts about like small businesses, and one of the things that we learn is that there's actually a small amount of businesses that are sold every year. So 20% of the businesses, so 30% of the businesses will eventually sell. So because of this, you have to do two things. You have to make sure that you're growing a business that somebody is going to want to buy. And the other one is that you want to remove some of your risk, that if you're not able to sell it, that you're building wealth on the side, or you're using your business to create enough cash flow to be able to invest in other things that will help you have a plan B for you to retire on. So that's very important. There's a lot of risk in building a business. You're in control of what your efforts are like producing. But yes, it is something so that you need to be aware of.
I'm glad that you mentioned the exit because I know that's also something that you help clients with. You have a SEPA designation. And so you really help your clients often think about what an exit down the road could look like. So, why should entrepreneurs be thinking about that besides kind of the obvious things that you just mentioned so far? And then, is there a time frame, right? Where is there like a number of years in a business where someone should realistically start exit planning? What are the reasons to start thinking about it now? And then when is now? How soon should we be thinking about that?
Well, I would say business that an investor is going to want to purchase is good business in general. So it's a business that's going to have a low risk. So meaning that there's not a lot of risk in having one employee that could be leaving at any time and make the business fail, or maybe it has to do with a small amount of customers. So we want to spread the risk. So we want to so remove the owner as much as possible. So we don't want the business to be around the owner, so that whenever that business wants to be sold, so removing so the owner is going to be a detriment, and the investor so may not want to take that risk. So all of that makes it so that if someone starts early and puts the things in place to allow so for that business to become eventually sellable, means that you'll build a business that's going to be more enjoyable for yourself to run as well. So being able to go away for a couple of weeks, like on vacation, and not have to worry that the business is gonna struggle, is one of the things that allows. So it's really a set of information, a set of things that you should be aiming as a business owner, and you shouldn't have to wait until it's time to sell the business. It should be something that's always in the background and always trying to accomplish these aspects for the business.
hmm What I'm kind of hearing is that you need to be able to have a business that can run without you, not only for you to be able to enjoy your life outside of the business, but also to be teed up for an exit so that someone could say, this is a business that could run without this entrepreneur leading it. And therefore, I'm willing to buy it from this entrepreneur who is currently leading it. I love the example that you gave of, can I go on vacation without my business falling apart? Are there any other gut checks or processes someone could go through to see, like, can this business really even run without me? Am I already starting to be set up for an exit, or do I need to make some serious shifts?
Well, there's a few different things so that you could be looking at. As I said before, you could be looking at the way that the vendors are structured. So are you putting so much like emphasis onto one or two vendors that could be changing their business model that could be affecting your business? So do you have only a small amount of customers that if that customer leaves, so that creates a lot of risk? So those are things so that could be looked at. And also investors like the idea of having a business that has a recurring income. So if you're able to sign contracts or have some sort of a business model that allows for income that's coming in on a monthly basis, it is a lot easier for an investor to see how that income can continue over time, and be able to expect that income like over the long term. So all of these things are very important. Again, it's something that everyone should be building, like over time, in their business. It's not something that just happens, like overnight, but it does help a business owner understand, how they should be creating some value in their business.
And we have been talking a lot today about entrepreneurs and business owners. Right. And that's definitely a core focus for you. But a big part of our audience would be regular W 2 employees who really want to learn the way that successful entrepreneurs are using systems, are planning, are thinking about long term wealth. We also have a lot of listeners who are investors and they make their wealth that way. So when we're speaking to that audience, does the personal CFO mindset, can that scale down to somebody who is earning a regular salary? And if so, how?
So I would say that the ideas are quite like similar. So the idea is that you want to get the data, so you don't have to have like two different set of books or like or accounting. So you don't need to keep track of your like business expenses, but you should be doing the same thing on your personal finance. So understanding where your money is going, what your family needs to live on, and then looking at ways to make that like more efficient. Are there things that could be cut down and have more at the end of the month to invest? And then once you have that set up and automated, then it would be to take a look at tax strategies. There's a less amount of options for people that are not a business owner, unfortunately, but there's still some ideas so that could be used to become a little bit more tax efficient, so that we can use the tax code to incentivize us to invest in things that the government wants us to invest in, so that we can have more of our money to grow our wealth over time. And then the last thing would be to try to start as soon as possible. So the longer that you're able to apply these things, these ideas, then wealth is just going to grow, like over time. It's just a long game. It's not something that happens overnight. But if you're able to be consistent and start early, I think like anybody can do that.
Yeah. And I love that we have been talking today about life outside of work and how money can really help us go and enjoy our lives. So, what does life look like for you outside of Breakaway? What are some things that you're really passionate about or excited about? Or how does your family and all of that fit into your definition of success in terms of life outside of work as an entrepreneur?
Like I said, like earlier, what we hear from our clients, so that they want experiences, and they want to live a more enjoyable life. So we do the same thing too. So we try to use our money in the same way as our clients do, and use it to have some like enjoyable time. So with our family and friends. I actually just came back from a trip on Saturday from Scotland. So I like to golf. So we went, me and my friends, to a golf trip for a week, and it was, amazing. So because I'm the planner, of the group, so I'm the one that takes care of, of the organization. But it was an amazing time, and I think that's what life is all about. So if I don't mind to work hard and have a growing business and take care of my clients, if I'm able to, like from time to time, to go away and enjoy life. So that way, a little bit.
I completely agree. Okay, Patrick, this has been great, but I do want to close off with a quick lightning round. Now, think about people now who are maybe considering hiring a financial advisor, an accountant, some kind of financial professional. So these are some questions specifically for them. Quick answers here are fine. I got a few of them. Are you up for that?
Yes, I am.
Okay. What is the first question someone should ask themselves before even hiring a financial advisor?
So what I would say on that is, now that we have AI, and I think it's like pretty much like everybody now is using some sort of an AI to research or to get some answers on different things. Personally, I don't believe that AI anytime soon, at least, is going to replace advisors in different ways. But I think it can help people to be prepared when meeting them and trying to find that right person. So I would say use AI to find a group of questions or a group of situations so that you can use that for each of the people so that you're interviewing, so that you have so depending on like on the on the situation, have an answer from each of the advisor on how they would approach each of these situations. So that's what I would do if I was an investor at in these times.
Mm-hmm. What are the fees that someone should make sure they really understand before signing a contract or signing really anything with a financial advisor?
So I think what is the most important part is understanding the value. So some of the things that we've seen in the past is personally, so we are not the cheapest. We're somewhere in the middle, and however, we provide a lot of services. So I think it's not much about what the fees that are charged, but more about understanding what is provided. So for these fees, and make sure that you're getting more, or you think that you're going to get more in terms of value than what you're paying in fees. So that's the most important part.
Okay, love that one. What is one red flag that someone might not be the right financial advisor for you?
So as a financial advisor, we act a little bit like a therapist. So as I talked about, a little bit, like earlier, that we sometimes push our clients to spend a little bit more, and it happens that we have to tell them the hard truth that they need to spend less. So there's ways that we need to come into to the relationship and be able to tell the hard truth. So and I think that someone needs that in that type of relationship. So being able to click with someone, being able to feel comfortable enough to be able to share your concern and your deep thoughts about your money and your life, I think is very important. So for me, someone that you're not able to click with is a red flag. So you should be able to share your thoughts, so without having to feel bad about it.
It's so true. It's like you got to tell the doctor what's
Exactly.
actually going on, right? These are the people who are here to help you, and you can't feel shy or embarrassed. And money is similarly one of those things that can bring a lot of shame or discomfort to talk about, especially to talk about honestly and transparently. So having somebody that you can just tell the truth to, this is your person to be honest to. Okay, so I love that. Last one. What is one question people almost never ask a financial advisor, but really should?
Oh, that's a good one. I would say people tend to be focused on fees and how they approach. Are they a fiduciary and things like that? So we always get the same questions. So I would be asking, so what makes you a good advisor? So personally, I like to educate. I like to spend the time to make sure that my clients, if we take a decision for them, that they understand why. So some advisors are going to be good at being able to take the complex and make it simple, and want to take the time to educate, so that at the end of the day, I want to make sure that my clients are getting more savvy with their money, over the long term. But some others may be more like technical, or they may be more they may have a different set of skills. So knowing how your relationship is going to be with the advisor, and how you would like that relationship to be, is also important. So it's not just about the technical stuff, it's about the approach and how things would look like as a client of that advisor.
Amazing. Well, thank you so much, Patrick, for joining us today, for really helping break down how not only entrepreneurs, but also everyday Americans can bring more structure, more strategy, more follow through into their financial lives, which directly impact our personal lives. I think that was a core theme that we discussed today that really aligns with how I look at money and business and what the point of all of this all is. So, thank you for driving that point home. And thank you to everybody who has tuned in, who's watched, who's listened to Income Insider TV. You can find the show notes for this episode at IncomeInsider.org. We will include links to the resources and topics that were discussed in today's episode, along with a link to connect with Patrick and learn more about his work. If you found this conversation helpful, please take a moment to like this video, subscribe to the channel, turn on your notifications so you don't miss the next one. This really helps us get this content in front of more people who would really benefit from this. So that's it for Income Insider TV. I'm Sam Laliberte, and we'll see you next time.